Good morning, ladies and gentlemen. Happy Monday. Is it Monday? Happy Monday. Hope everybody had a great weekend. How you guys doing today? Can you guys hear me? Mic check. Oh, yep, all good. Cool. Ron, great trading this morning. Thank you. You gave me the first lesson of the day with all your trades. You know I appreciate that. Good morning, Mike. Guys, before we do anything at all today, good morning, Wells. Nice to see you. Before we do anything at all today, I want to share this picture with you. I won't say whose morning it was, but this was somebody's morning in the room. The only picture of the large chart is this one, because that's the same look on every trade. And the trade looks the same on every trade, guys. And this is one of the signs, like people that are professional traders, people that are successful traders, people that are finding success daily in the markets, one of the most common characteristics is that all of their trades look the same, that they're picky on what it is that they'll risk their money on. And I think that this is such a great lesson for new users. Good morning, Johnny Rocket. Because everybody gets starry-eyed. Everybody gets excited about all the opportunities in the market. And guys, there are a million opportunities in the market, and it's pretty fantastic when you think about it. When you think about just how much money there is to be made in the market. But if you can't find it simple, if you can't find it consistent, what you're going to do is you're going to spread yourself thin. And when you spread yourself thin, you're going to begin confusing rules, you're going to be confusing looks. And what you're going to find is that the more trades that you try to catch before you're really solid at one trade, is it's going to probably going to work its way through and make it a little difficult to catch any trade. So rather than chasing all of it, why not grab the best, right? Two contracts. What is that? 11 ticks. Guys, that is a $220 trade. One, two, three, four, five times. It's $1,000 a day. That's $20,000 a month, taking the same look every time. So something to think about this morning. I say it a lot. I say to embrace simplicity. I say to keep it simple. One day, one of you is going to listen to me, and I know that there's a lot of you in this room that have gone to both sides. Big swing on the pendulum. You kept it simple. You were finding success, and since that success found you, you began trying to make it complicated. And when you did, things went sideways, right? So let's keep it simple today. But before we do anything today, let's go to forexfactory.com and make sure that there's not some crazy news going on today, right? Two charts, one market. That's all you need, right, Ron? I should add that into my classroom one day just to see. Guys, forexfactory.com lets you know when there are news releases which may affect the market. It lets you know if there is something going on that's going to make deep pocket investors, institutional traders, the guys that create trends, momentum, if they're going to react. And you can see it with these red boxes, these high impact releases, these medium orange impact releases. So part of my routine every day, and I'm a big routines guy, is when my charts are loading, when the charts are calculating, when fibs are being produced, what I'm doing is I'm checking forexfactory.com and I'm making sure that there's not a news release. And I don't really, it doesn't matter to me what the news release is. And it's kind of fun. Did I take that picture of the news earlier today? Whoops. Guys, I could go like this every morning. It doesn't matter to me what's being said. All I want to know is that there's some sort of reaction that may happen during the market that may make it untradeable, that might make it turn all of a sudden. So if you see high impact, if you see medium impact, you may make the decision that you'd rather not trade into that news. And if that's a decision you make, that's fine. If you decide that you will trade into news, that's up to you as well. But being aware of it creates an advantage because it's going to help keep you from getting run over quite a bit. Everything that I talk about in the room, guys, is right here on the education page. There are no secrets with Nexgen. There is no magic handshake. There isn't give me your money, let me give you a little bit, then give me some more of your money so that I can give you what you need to piece it all together. We literally give you anything and everything that you need to be successful right off the bat. Even in your demo, you have a full working copy of the software. You're trading on the platform. You have the simulator, the ability, and here's the big one, guys, not the ability to trade it, but the ability to back test it, the ability to go back and take these rules that we're going to talk about and decide for yourself whether it's something that's going to work for you. And what I've found is that anybody that goes back and back tests these rules, anybody that goes back and really studies the software during their demo, rather than just sitting on the sidelines hoping to absorb all this energy, um, they stick around forever, guys. It's impossible not to. This is the greatest software in the world. If you find something better, John Novak tells people all the time, let him know because he wants to buy it, right? Um, we're going to talk about one simple trade for the first part of the classroom today, guys. We're going to talk about what's called a high probability trend trade. And if I go to the tutorial section on the education page, there's actually a glossary of common terms. A high probability trend trade from the glossary of common terms is defined as when each indicator on every chart agrees for the trade. Everything is going the same direction, right? There's absolutely nothing in the way. The momentum is its absolute highest, and your entry comes from the perfect spot, guys. This high probability trend trade is a trade that typically wins 70 to 80% of the time. This high probability trend trade, more importantly, is a trade that's going to teach you to read your charts. And that's really the goal. For your first 30 days with Nexgen, outside of your demo, learning this high probability trend trade, your goal should be to become a chart reader, because when you're a chart reader, you're going to fluently understand where the market is likely to continue, and you're going to be able to grab hold of that spot, and you're going to use that spot for an entry for this highest probability trend trade. You're also going to understand where the market is likely to go. This is going to help you make intelligent choices to get to those profit targets. You're going to be able to use the momentum of the market. You're going to be able to use these key Fibonacci areas, and you're going to have intelligent targets. And then finally, you're going to understand where the market is likely to stop. This, to me, is one of the most important things that you can give yourself as a chart reader, because areas where the market is likely to stop are those points where the trend may end, where the market may bounce. These likely to stop places are what we call termination conditions, and they're going to line up with these key Fibonacci areas that your software provides. And these likely to stop areas, the first thing they'll do is they'll keep you from taking that last trade, right? You found success with the trend, you found success with the momentum, you're up a little bit of money, and then we reach that likely to stop area. And you can say to yourself, it's time to pump the brakes, it's time to sit on my hands and not take that next trade, because there's no reason to give back all that money that the highest probability trend trade gives you. And then the second thing that these likely to stop, these termination condition areas are going to do for you is they become an anchor for the highest probability trend trade that you can take. When that market reverses from a key Fibonacci area and you're able to take that rules-based high probability trend trade after, this is the trade that typically wins 70 to 80% of the time. This should be, and this whole section is defined or named first 30 days and beyond, guys. The first 30 days with Nexgen, it's only 20 trading days. It is a drop in the bucket regarding the time that your lifespan is. But if you focus on this highest probability trend trade for the first 30 days, focus on the entries for this highest probability trend trade for the first 30 days, by the end of that 30 days, you're going to understand where the market is likely to continue. You're going to understand where the market is likely to go, and you're going to understand where the market is likely to stop. And it's these three key concepts that are going to take you beyond that high probability trend trade, that are going to open up doors, that are going to make your trading easier, that are going to make your trading focused, and it's going to make your trading pragmatic. It's going to keep you focused on what the indicators are telling you rather than what your gut is trying to relay. Your highest probability trend trade is only 3 rules. 3 rules that provide 3 advantages. The three advantages are the recipe for a trade, guys. A trade is momentum. A trade is a clear path, and a trade is an entry area. And it's these three concepts together that are going to have you pulling the trigger, getting into the market, guys. And these three rules, let me give them to you. I like to share a lot of pictures. If you're brand new with me, steal these pictures. Every time I put them in the room, take one of them. Every time I put a link in the room, take one of them. Trust me, they're important, and you'll be glad that you did. These three rules are going to happen on two charts. Two charts is all you need to take a high probability trend trade. Your large chart, your slower chart, this broad stroke of a brush, it's going to define direction, momentum, areas, and it's going to do it all with one bar. One bar on that larger chart, one single bar. You're going to have all this great information. Your first two rules for the high probability trend trade are going to be met on this large chart. You're going to have the advantage of momentum. You're going to have the advantage of a clear path before you ever turn your eyes off of this chart. And this broad stroke of a brush, when the rules are met, gets refined by a smaller, faster chart. We're gonna take that one bar on the large chart, and we're going to spread it out over the course of 15 to 30 bars on a smaller, faster chart. And this smaller, faster chart refines the broad stroke. It's going to define your entry point, that point where the market is most likely to continue. And by doing so, it's going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. Because when you look at the market on a whole, and you look at this two chart system, your large chart is like the large crowd. These are the people that are the market movers. These are the people that define the trend. And these are the guys that are going to give you the momentum, that are going to establish the clear path. And then when these guys have everything going the right direction for us with all that momentum, this smaller, faster chart is a group of people that love to fight momentum, a group of people that love to fight the trend. And they're going to create these tiny little pullbacks on the market that are going to get you to that point where the market is most likely to continue, guys. And that is going to be the key to success. Good morning, Lady P. Nice to see you back in here. So I'm going to encourage new users, keep it simple. Give me 20 days of focusing on entries. That's all I need. 20 days of focusing on entries. And if you remain singularly focused, if you remain laser focused on your entries for 20 days, what you're going to find is that you can read your charts. And when you find that you can read your charts, you're going to find that you're taking the best of the best trades, that you're winning more than you're losing, that you're creating a foundation that's going to establish your trading plan and give you a path for success right out of the gates. So we're going to go back to the rules and we're going to define each one. We're going to look at it on the appropriate chart. And by the end of this first hour, we will have discussed the high probability trend trade. I'm going to encourage you new users, especially my demos. If you have a question about a concept, make sure that you raise your hand. Make sure that you ask. If you think you have a full understanding of a concept, take a picture and annotate that chart and post it in the room and say, hey, Mark, this is my understanding of strong trigger lines. This is my understanding of termination conditions, or this is my understanding of the entry. Because what I find very often is that our brains embrace the idea that we love to be right. And I see these lessons kind of get misconstrued in translation, and people believe that they're trading the appropriate rules, and maybe they're fudging them just a little bit. So take a picture of strong triggers and drop it in the room and let me know that you're good with it. And then when we talk about termination conditions, let's take pictures of termination conditions, post them in the room, and make sure that you're comfortable with what you're seeing, because your step-by-step path to becoming a confident trader ASAP revolves around 90% you posting pictures in the class, you showing me what you know, what you're doing, why you're doing it, and me giving you feedback. It's like a private lesson. I'm here 15 hours a week live to give you feedback on anything and everything that you're doing. Make sure that you're giving me that opportunity. Make sure that you're giving me the chance to talk to you about what it is you see. And if there's any challenges, we'll work through them together. We'll get you exactly where you need to be. All I need is for you to post a trade. And then using your spreadsheet, guys, Nexgen provided you a spreadsheet. It's in your Nexgen Study Picks folder, and it's just a trade journal. it's an opportunity for you as you simulate, as you learn these rules, to put your trades in a sheet and understand that you're taking that trend trade and what were the rules and how did it work out. But you're going to use this spreadsheet every morning. You're going to go back and study it. So, for example, this morning, the trades that I took on Friday, and I think it was only two, I looked at this morning and I said, what did I do? Did it work? Did it not work? Did I break a rule? Was I comfortable? Was I uncomfortable? And this little historical study each morning, 3 to 5 minutes, it's going to set you up for the day. You know, you're going to get yourself ready. You're like, oh my gosh, I broke rules here and it didn't work out. I lost money. Therefore, today I'm going to try not to break that rule. And guys, you're going to break rules for a while as you get comfortable with everything, but it's going to accelerate the learning because you're going to be doing that study process. This worked, this didn't. This is what brings me success. This is what racks my brain and makes me nervous. So get in the habit today of using that spreadsheet. Get in the habit today of embracing that path. Posting in the class a lot, guys. I want to see all your pictures. I want to hear all of your thoughts, your hopes, your desires, your wants, your needs. Get them in the classroom. This is your classroom. We're going to take the first hour. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade on that high probability trend trade. You're going to simulate. You're going to post those pictures in the classroom. We're going to talk about each one to make sure that you're focused on trading the correct rules. Because when you're focused on the wrong rules, when you're only concerned about making that monopoly money, that simulator money, because a big P&L inflates your ego, you are setting yourself up for long-term failure. You're creating muscle memory in the wrong direction. We're going to simplify, and you're going to hear me say that a lot. Simplify. Make it easy. Keep it focused. Let's focus on one trade that yields the highest results, right? And then you're going to learn the Fibonacci and the trigger looks so that they become easy. You're going to take pictures every time they're met so that it becomes easy, guys. And then that spreadsheet, there's a My Personal Trade Setup look where you can put those pictures each and every day. This was rules met. This was rules met. This was rules met. And again, if you study it just a little bit every day, you're going to burn that image into your brain. And they are going to become easy. That market that moves fast today is going to magically slow down over the course of the next 30 days. That market that seems difficult to make decisions in the moment, you're going to be able to do your analysis in 4 to 5 seconds. But it's that repetition, that recognition that happens. Make sure you're using market replay, going back, fixing your mistakes, taking more pictures, bringing them to the class, and then guys, we're just going to rinse and repeat until you're comfortable, until you're capable. And that's going to be our plan for today. So let's get focused on your large chart needs strong trigger lines. What does that mean? I'm going to go to the tutorial section. I'm going to go to the T3 trigger line section. And the first thing that the T3 trigger lines do is they define trend. Your trigger lines will be responsible for letting you know which way the market is trending. When the smalls break above the large, your background turns green, and a green background means that you are in an uptrend. One of the biggest advantages new users can give themselves is to always trade with the trend. And if that background is green, you're only looking for rules to be met for high probability trend trades long. And if the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. Guys, this really is the first advantage that you give yourself. And you'll find that never fighting the trend is going to pull some losers right out of the mix. Next, we need strong triggers. Strong triggers in an uptrend mean that the small triggers have broken above the large triggers. Both the small triggers, these solid lines, and your large triggers, the dashed lines, are wide. They're angled in the direction of the trend, which happens to be up. And it's the space created between small and large that lets me know that the odds are favorable for the market to continue in the direction of the trend. Strong trigger lines give you the advantage of odds favorable momentum. And when you have odds favorable momentum, that's when you're going to be able to refine on a smaller, faster chart. That is the most favorable look for buying Fibonacci support in an uptrend or selling Fibonacci resistance in a downtrend. On your large chart, it's going to look like one bar. It's going to look like it has a tail or a wick. You guys are going to be able to pinpoint to the bottom of this tail for entry with that odds favorable momentum. And you're going to see that market continue typically in the direction of the trend with all that momentum. So, rule number one, strong triggers, is from the point of separation until those small triggers return. Because when they return and they work their way inside of the trigger lines, smalls inside of large, now we've weakened the large triggers. And you'll see that the language is anything can happen up or down. Anything can happen, whether it's going continuation or maybe there's going to be a full reversal. And you're going to see that weak trigger lines precede reversals very often. So probably the easiest lesson of the day, guys, is strong trigger lines, the advantage of momentum, putting yourself in a position where that trend is likely to continue. And if I open up, this is the S&P, and I take every indicator off of this chart, except for my trigger lines, this is where it becomes a great opportunity for you to study, to recognize, whoops, I put the wrong chart on there. That's going to take just a second. It's going to give you the opportunity to scroll back, to look for those strong triggers, to take a couple pictures, to reinforce those rules. Identifying when the smalls are above the large, when the large are wide, they're angled in the direction of the trend, when you have that momentum, and realizing that your advantage happens from the point of separation until they return. And this is where we're going to look for that highest probability trend trade. Guys, is everybody okay with this first concept, the idea of momentum? Giving yourself the advantage each and every time you take a trade, not only trading with the trend, but also with that odds favorable. This is your cue to put a big capital Y in the room to say, absolutely, Mark, odds favorable momentum makes sense. What an amazing advantage to give myself going into each and every trade. Something to think about. Anything can happen triggers, weaken triggers, they precede a reversal. Odds favorable momentum, there's one of those tails, there's continuation. When they become anything can happen again, notice that it precedes a reversal. Guys, these are patterns that you're going to see every day in the market. This is why we insist on odds favorable. Sometimes there's going to be indecision. Sometimes the small will be up, the large will be down. Sometimes your background will be green, but your triggers will be red, guys. And when they don't agree, this is when the powers that be, the big traders, the deep pockets guys are fighting it out. Buyers and sellers are going toe to toe for supremacy. If you insist on odds favorable momentum as the precursor for every trade that you take, you should never get caught in these fights. You should never get caught in this indecision. It's easy to try to predict what the market will do when nothing agrees. It's easier, good morning PFI, to absolutely insist on odds favorable momentum. And then if I go back to that S&P and I put on only my trigger lines for real this time, what you're going to see is that odds favorable momentum happens. There's some of those tails. Easy to get a hold of it. There it is again. Anything can happen triggers precede a reversal. Weaken triggers precede a reversal. There's one of those tails right at the end. There's those tails when it looks its absolute best, guys. And there's that indecision. No reason to get caught in these moments. We don't have to predict what's going to happen in the market, guys. We can read our indicators and we can do it in the moment to provide the advantage. So rule number one is the advantage of momentum. Rule number one lets me know that the odds are favorable for the market to continue in the direction of the trend. Rule number one must be true to look for rule number two. And rule number two says termination conditions are false. We have not reached an area where the market is likely to stop, or where it's likely to reverse. Good morning, Rakesh. I don't remember if I said good morning, PFI. Good morning, PFI. Whoops, wrong picture. Guys, the areas that may create a reversal in the market. Red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s, magenta divergence high lines, cyan divergence low lines. All of these areas are the areas where the same people that create momentum may be reacting. They may be taking profits. They may be entering trades. But the reality is that when price reaches one of these areas, it may reverse the market. It may create a bounce. And you're going to be able to recognize it with a simple recipe. And if I go back to the tutorial section, your recipe is as follows. The first thing that happens in order to identify a termination condition is price reaches the area. These dynamic Renko bars that are on your large chart are going to work their way down and either reach Fibonacci support or perhaps they reach Fibonacci resistance, maybe a yellow 1-to-1. But when price reaches an area, all you have to do is ask yourself, where are the trigger lines? Guys, it really is that simple. And if all of your trigger lines remain above support, this is an area that may stop the market. This is an area that may reverse the market. This is an area that may create an untradeable bounce. Next-gen users have this amazing opportunity to recognize before the market ever gets there that this is an area that can create problems. When you reach an area and all of the trigger lines remain below resistance or above support, what you've done is you've reached that termination condition and you do not have the advantage of a clear path. The second part of the recipe isn't in place. Therefore, we're just going to stop looking for short trades. We're going to wait for either the area to break or for the market to reverse. Great question, PFI, and I'm going to answer that one in just 1 second. That is an awesome question because that's a very common question. If we reach an area and no trigger lines break through, guys, it's a termination condition. It's an area that may stop the market. The path isn't clear. The path is considered clear when both your small and your large triggers break through the area. So in this case, we have an area of support right up here. I hope you can see my mouse waggling up there. When both the small triggers and the large triggers get below support, support begins to act as resistance. The path is now clear, and you'll notice in this picture, and I kind of like this one, the small and the large clear support. It's behaving as resistance, so the path is clear. I still have odds favorable momentum, and there's one of those tails. There's one of those potential entries that you're going to be able to pinpoint. And notice that from this potential entry with the clear path and the odds favorable momentum, it goes straight down to Fibonacci support. You're able to identify where the market is likely to go. It's that chart reading coming through, kind of full tilt. So here's your question, PFI. These divergence lows are going to happen from a pivot that loses momentum. The pivot and the calculations are taken care of behind the scenes, guys. It's part of what the software does. So when you have this divergence, so what do you, is the divergence high a termination condition? No. There's no divergence on this one. Oh, you're talking about this picture. Is this divergence high a termination condition? All right, so PFI, let's go back through the recipe, right? Price reaches an area. That's the first thing that has to happen. Are you good with that? In order for this line to behave as a termination condition, price must reach it. So right here, it's nothing. It's just a big pink line running across the screen. It's just a blue line running across the screen. Do you see it? So watch this. Let's take a picture because this is really a great question. At this divergence low, what we know, the only thing that we know is that there was a loss of momentum. Price created a pivot. It went down from up. And when it did, there was a loss of momentum. So your software prints this cyan line. This cyan line doesn't print until right about here, about the third bar, which is why the line on its own is not a termination condition. The line on its own is nothing more than a loss of momentum that we see visually. And then we go to the recipe. When price comes back and reaches that divergence low, and the trigger lines remain above, now we have a termination condition. So just a pivot with a loss of momentum, now it's a termination condition. Does that make sense? And when that termination condition creates a full reversal, now we're going to call it a strong bottom. And when that termination condition creates a full reversal, gives me odds favorable momentum, and I get an entry, now I have my highest probability of success. A termination that creates a full reversal. Did you? You got clobbered from? Show me a picture. Yeah, bring me the pictures. And guys, what you're going to realize is that anytime you lose a trade, if you post it in the room, we're going to have a great conversation about it, and you will walk away from the conversation with clarity. 90% of what we do during the day is going to be reading indicators. 90% of what we do during the day is going to be waiting for the opportunity of success, guys. Price reaches resistance. All of my trigger lines remain below resistance. Therefore, I'm not looking for long trades. And look at the bounce that happens off of that termination condition. That bounce pushes the market all the way down to Fibonacci support, right to that mid band. None of the trigger lines break through. My recipe is met for a termination condition, and I'm not looking for short trades. 90% of what I do throughout the day is going to be sitting on my hands, waiting for those advantages. And then PFI, you'll notice that there was a loss of momentum at that high pivot. When price pulls all the way back up to resistance and that divergence high line, all the trigger lines remain below. Now we have that pivot stop out of a divergence high. Now we have that termination condition using the divergence high, but we also have the termination condition off the resistance. And when the two work together, it creates a lot of power in that top. And this termination that creates a full reversal is a strong top. And when a strong top or bottom gives you odds favorable momentum and a clear path, there's one of those tails. There's one of those absolute best of the best entries, looking for the opportunity to go from that termination condition down to the next key areas. That's your high probability trend trade. So let's take a look. I'm not sure why it's making me log in for it. Your link appears to be broken. Can you try one more time? Here, let me close these out. Let me try it without that open. All right, I am logged in. Here we go. So let's see what we had. And there we go. And here's our recipe. And what a great lesson, right? Because you're not going to forget this one. And this is one of my favorite words. Clear path besides previous divergence. So price reaches the divergence high. All of the trigger lines remain below. PFI, that's your giant red waving flag that says, let it break. Does that make sense? Textbook termination condition. Absolutely beautiful usage of it. And now, next time you see that, you're going to be safe. Other than that, everything looked perfect, didn't it? You had all that momentum, but that termination condition said no dice, not going to happen. Great picture. And guys, this is why we post in the room, because PFI, and man, it's a great entry if it wasn't there. So props on the entry as well. But that termination condition got you. And great job doing playback. So always let it be simple, guys. Price reaches the area. If none of the trigger lines break through that area, sit on your hands, wait for a second. It's either going to break or it's going to hold, and you never know which it's going to do. It's either going to get a clear path or it's going to create a reversal, guys. Price reaches one-to-ones, the trigger lines remain above. We all know no more short trades. We're safe. We're not giving our money away, hoping that areas break. When this termination creates a full reversal, large triggers go from red to green, smalls get above the large. Now we have a strong bottom. And then when both small and large triggers get above resistance, we have a clear path. So I have smalls outside of the large. I have a clear path. There's one of those tails. There's one of those entries. There's that highest probability trend trade. Sometimes, actually, you know what? Before we go to that one, I want to share some pictures with you guys. Termination conditions from a high. Notice that the recipe is written right there on it. Price reaches, no triggers, no trade, guys. PFI, there's your divergence high, not a termination. There's that pivot stop out of a divergence high. Now it's a termination, just like your picture. We see it at resistance. We see it at one-to-ones. It's the exact same recipe from lows. One-to-ones, support, and then once again, there's that divergence low. But when price retests it, price and triggers don't break. Now it's a termination condition. Is everybody comfortable with the concept of termination conditions at highs and lows? All you have to do is worry about whether or not price reaches it. If it breaks, we have a clear path. If it doesn't, the path is not clear. And we can keep it simple, right? Two options for the new user. Either the path is clear or it's not. If price reaches the area and the trigger lines remain below or above, no more trades. And if small and large break through, the path is clear. Rule number 2 is met. There's that odds favorable. And then there's that pullback, right? There's that potential entry for your highest probability trend trade. And then PFI has seen the movie. I love it. Sometimes the market turns from nowhere, right, guys? Sometimes it doesn't hit a fib. Sometimes it doesn't make it to the one-to-one. Sometimes it doesn't reach that divergence high, even with odds favorable momentum. On a large chart, you don't see that change happening. That change is slow to happen because of the size of the chart, because of the time frame. This final termination condition is the only termination condition that I'm going to look for on a smaller, faster chart. So you're exactly right, PFI. 3 divergences in the same price range may terminate a trend, guys. 3 divergences means that we've had 3 losses of momentum, and you can see it visually with that cyan line. If it happens 3 times in the same price range, it may terminate the trend. It may just simply push the market further in the other direction. But you're going to see this look on a low. You're going to see this look on a high when your larger chart, your slower chart, may be changing direction on you. So the only termination condition that I respect on a small chart, 3 divergences in the same location. It becomes even more powerful. We go back to our trigger line lesson. When the small triggers work their way inside of the large triggers, when we have those anything can happen triggers, we have that loss of momentum. We see it visually from the trigger lines. Now we see it visually with the divergences. This is our cue. No more short trades. This is our cue. No more long trades. And not only will this help you recognize potential bounces without the advantage of key Fibonacci areas, this becomes a great management tool for you guys getting in and learning to get more out of your trades or preserve equity. Because if I get in, let's say hypothetically, right here at these one-to-ones, and I'm in a short position and I'm anticipating it going to the next fib, but I see 3 divergences print, this becomes a management tool. This says, hey, Mark, it's time to jump ship. It's time to get out of that trade. Things may be changing in the moment. So guys, termination conditions are designed to keep you safe. Termination conditions are designed to give you the advantage of a clear path. And termination conditions, what you're going to find is that just strict avoidance, trading into them, is going to keep a lot of the powder dry for you. So I'm going to share this picture because eventually you guys are going to be chart readers and you're going to begin to recognize termination conditions in a fraction of a second. You're going to be able to recognize clear paths in a fraction of a second. Then it takes us to our next scenario. This is our medium probability scenario, ladies and gentlemen. This is an area with the potential to break. When price gets to the area and the small triggers break through, in this case it's that 69.80 resistance. Small triggers break through with odds favorable momentum. This 69.80 area has the potential to break. Guys, I love this, and it should be on a coffee cup. Strong triggers break things. When I have this much momentum coming into a Fibonacci area, the smalls break through and the large don't, this area has the potential to break, but it hasn't broken yet, and therefore it's not a clear path. You guys are going to take 30 days focusing on the highest probability trend trade that's going to have momentum, a clear path, and an entry area. When you're comfortable with that, when your chart reading begins to get where it's at, you're going to start taking what we call medium probability trades. And this is the second trade. When we talk about simplification, this is the second trade of the two trades that are going to be in your plan. And this trade is called a 50-50 trade. And it means that half your triggers have made it through, 50%. Half of your triggers have not, the other 50%. It has nothing to do with the odds of success. It has nothing to do with your win or loss percentage. It has everything to do with 50% of your triggers through and 50% are not. You could call it an over-under trade. You could call it a straddle the fib trade. But what it means is that with all this momentum, it may break, but it's not a clear path, so it's not high probability. It falls into what we call a medium probability trade. And this is where most of your indicators line up for a trade. However, a small issue exists. Singularly, your small issue becomes that the path isn't clear, guys. And these trades rely on your chart reading. These trades rely on you not giving up your momentum or your entry area. These trades need to be managed assertively. These trades need to be quick profits and quick break-evens. And these medium probability trades will be the second trade that you look for. So initially, you're going to keep it simple. Ultimately, you're going to start taking these medium probability trades and managing them assertively. But I want you to see in the same slides, there's one of those 50-50 looks. That area ultimately holds and reverses the market. There's the same 50-50 look, and that area breaks. So we're going to talk about and teach you a plan for success on medium probability trades, but I want you guys to stay focused initially. Insist on the clear path. Is everybody comfortable with the terminations? I know if you're brand new, you're like, oh my gosh. But this is how easy they become to recognize. Take these pictures, guys. Price reaches Fibonacci resistance. None of the trigger lines break through. This is an area that may stop the market. And guys, look at it. This is an area that created a full reversal. And where did the full reversal go to? All the way down to Fibonacci support. You have the advantage of recognizing where the market is likely to react long before the market ever gets there. Once again, straight from Fibonacci support. Guys, if you don't believe in the magic and the power of Fibonacci, all you have to do is scroll back on any large chart, and it's going to make you a believer. There it is again. There it is reacting to Fibonacci and resistance. This is where Nexgen users don't get caught up in consolidating markets. So guys, I'm going to ask you respectfully and politely, give me a Y in the room if you're comfortable with the idea that termination conditions can stop the market, that it takes away your advantage of a clear path, that is just really a recipe for success, avoiding these. Awesome. So if the large chart says momentum and the large chart says nothing in the way, we're going to go to that smaller, faster chart. We're going to refine that one bar that defines momentum in a clear path, and we're going to figure out how to recognize that bottom of the tail, that best of the best area for entry. We're going to refine the broad stroke of a brush, and we're going to turn it into an entry for a high probability trend trade. And when the rules are met on the large chart, this is your look on the small chart. You're going to have strong triggers. You should insist on strong triggers, small outside of the large. The background's also going to be green. And your large triggers and your synthetic triggers on that smaller, faster chart, large triggers are the smooth large triggers. Synthetic triggers are your 13-2 large triggers, or your large chart, large triggers. And these two are going to work together harmoniously, symbiotically, to create what we call favorable large triggers. When they're overlapped, when they're one on top of the other, when they're strong and angled in the direction of the trend, guys, this is favorable large triggers. And this becomes very important because rule number 3 says that you're going to use a limit order to buy or sell a pullback to an area inside of favorable large triggers, which means rule number 3 says you are going to sit and wait with an order at an area, fibs, mid-bands, or one-to-ones, right inside of these favorable large triggers. Here you can see the entry. You guys are about to pinpoint. This is going to reduce your risk. This is going to maximize your profit potential. And it's become easy for you to recognize what we call the window of opportunity. Remember that the large chart says up. The large chart says odds favorable. The large chart is a reflection of the large crowd, and the large crowd wants the market to go up, and the large crowd says that there's absolutely nothing in the way. And we're going to rely on these yahoos to fight everything. And they're going to create a pullback, which is a small retracement in price that's counter to the underlying trend. And hopefully they create a pullback that runs into an area of support inside of those favorable large triggers, guys. And your pullback begins with a reversal bar. A reversal bar is a down bar after all of these up bars. The large chart says up. The large chart path is clear. The small chart has favorable large triggers. You've identified fibs, mid-bands, or one-to-ones that may fall within, and you're waiting for the reversal bar. And at the time of the reversal bar, you're going to create what's called the window of opportunity. And the window of opportunity for a long trade when the market is going up, when you're buying the market, is from your highest point of support to your lowest point of support inside of favorable large triggers. This is rule number 3, guys. You're going to activate a limit order right at the top of that window. Because of the momentum on your large chart, your limit order goes at the top of the window. Because there's a clear path on the large chart, your limit order goes at the top of the window. And you are absolutely powerless on whether or not your order gets hit. And there are 2 potential scenarios. Either that market continues in the direction of the trend with all the momentum, it continues in the direction of the trend with a clear path, or price pulls back and reaches your limit order right at the top of that window. And your window was defined by looking from the top of the trigger lines to the bottom of the trigger lines and identifying fibs, mid-bands, and one-to-ones inside. And your window of opportunity is that shaded box right there. That's the point where the market is most likely to continue. This is where your highest probability trend trade entry comes from. We take it at the top of the window because of the momentum. But I want you guys to be fully prepared mentally that it may go to the bottom, right? It may extend to the bottom of that window. And if it does, that's okay, because it's still at the point where the market is likely to continue. Because this is a trade that typically wins 70 to 80% of the time, it means that 20 to 30% of the time, the market's going to be wrong. And we're going to allow it to be mistaken with a little bit of grace. So we're going to put a protective stop outside of the window of opportunity where that market shouldn't go. And if it comes down and it hits it, well, then we're out of the trade because we lost that advantage, guys. And it's okay, because small losses are a normal part of a positive equity curve, right? Anything that wins 70 to 80% of the time, it's mathematically obligated to lose 20 to 30% of the time. 20 to 30% of the time, the market is wrong. It's a cost of doing business. It's like paying rent. It's like buying supplies. But we're going to minimize that 20 to 30% with a protective stop right there where the market shouldn't go. You guys, this is your highest probability trend trade entry. And I want you to focus on entries for the first 30 days with Nexgen. And if you get great at this entry, right? If you begin to recognize these conditions and you take that trade, this is the trade that typically wins 70 to 80% of the time. This is the trade that typically goes to that next Fibonacci area with all that momentum and a clear path. This is the trade that creates a foundation for success. This is the trade that gives you the opportunity to take a trade that typically wins 70 to 80% of the time. And if your goal as a trader, and I hope your goal as a trader is to be consistent and profitable, this gives you the best chance of success as a brand new user as you learn to read your indicators. Once this market moves in the direction of the trade, you get that reversal bar up, you're going to reduce your risk. You're going to manage your risk one more time. And put it below that reversal bar. You guys, the only thing that you need to do as a brand new user for 20 days in this room is to go back and study, to go back and recognize this happening over and over, whoops, and to burn the look in your brain until it becomes easy. And I'm going to show this picture with both charts together. When the momentum is strong, when the path is clear, if I circle the tail on a 13.2 or a 34.5 if it's NASDAQ, if I circle that tail on my large chart, it should line up with an area of support inside of favorable large triggers on my small chart, guys. This is your entry for the highest probability trend trade. Notice that it extends a little bit beyond the highest point of support. Our protective stop was down here. Your job for 20 days is to get good at this entry, is to recognize this entry, is to create recognition through repetition. And you can do that, wow, look at that termination condition hold. You can do that by scrolling back on a large chart. And when you have odds favorable, take a second and circle a tail. And this was at 904 on crude oil. Termination creates the full reversal creates odds favorable. Let's see what it looked like on this chart, right around 901. Pulls right back to an area of support inside of favorable large triggers. Guys, this is your best of the best. This is the picture that you need to take. You can scroll back 10 days on crude oil. You have that workspace. You can scroll back 10 days on the S&P. You also have that workspace. We're going to practice this entry, and we're going to do one together right now because I think this is important for new users. And if you're brand new with Nexgen, I really want you to play along with me here. Everything starts on the large chart. So who's new in here? We've got Craig, Jason, Wells, you're still new. Andrew, Ty, Stock Chip, T. Copeland, Michael, Trader Rick, Ligarius, Dominic, Sid, Adam, Mark Andrews. Guys, this is for you right now. This is your first 30 days. Give me a Y in the room. Do I have odds favorable momentum? Are my small triggers above the large? Are my large wide and angled in the direction of the trend? Guys, is it okay for me to look for rule number 2? Right, so we're good, right? And then I ask myself, has price reached an area? Has the top of this price bar reached a Fibonacci area on my large chart? Or is my path clear? Guys, do I have a clear path on my large chart? I don't see a fib. I don't see one-to-ones. I don't see a divergence high. All I see is nothing but green skies above this odds favorable momentum. Give me a Y if you're with me. There are no termination conditions. And guys, there's two types of people that learn this software. There's the people that participate and get it quickly, and there's the people that struggle because they decide to sit on the sidelines quietly. Be one of the people that participate. Lady P, absolutely. So since the rules are met on my large chart, since I have odds favorable, since I have no termination conditions, watch this. I don't need that chart anymore, do I? All I'm doing now is refining, looking for an area of entry. And guys, I did this one on purpose. Am I worried about this red Fibonacci line on a smaller, faster chart? Some of you as brand new users are going to say, but Mark, it's a termination condition. Price reached it and the triggers are below. And that's when I remind new users that your large chart defines your areas. What we're hoping for is that this little Fibonacci line here gives us a bounce to our best of the best spot. And with everything saying up, we're waiting for a reversal bar. And this signals the beginning of a pullback, guys. This signals the beginning of a small retracement. And we're going to look for areas of support inside of favorable large triggers. Guys, this looks exactly like the picture in the manual, doesn't it? So let's define our window of opportunity. From the highest point of the triggers to the lowest point of the triggers is that big. Is everybody comfortable with that? We're looking at our favorable large triggers. This is how big the triggers are. But our window doesn't have to be that big. Our window of opportunity, the point where the market is most likely to bounce, extends from the highest point of support to the lowest point of support. Your job as a brand new user is to activate a limit order right at the top of that window, maybe 2 ticks above it. Because of the momentum on the large chart, we don't want to risk missing that trade. Guys, this yellow line right here, let me make it something that's not yellow. This seashell line right here represents your entry point. This is where you're waiting for the market to come to you. And if the market comes down, whoops, I didn't move it up above 2 ticks above support. Mid-band's coming up. Orders are going to go 2 ticks above that highest point of support. Guys, that becomes your entry for the highest probability trend trade. And what you'll notice is that what you've done is you've pinpointed where that tail is most likely to happen by using support inside of favorable large triggers. And this becomes your trade, guys. This becomes your study tip. There it is. There it is. All you have to do is take a picture. And once you take that picture, write your rules on it. Annotating your charts is key. Write odds favorable momentum, right? Rule 1. Correspond the advantage with the rule. Rule 2, we have a clear path. Put a Y. Absolutely we do. And rule 3 says area inside of favorable large triggers. I want you to get in the habit of writing this out for your first 30 days. Taking arrows, saying there is my odds favorable momentum, there is my clear path, and there is my entry inside of favorable large triggers, and this is my highest probability trend trade. And I want you to take that picture and drop it in the room. And when you drop it in the room, you and I are going to have a conversation about whether or not it was a rules-based trade. I'm also going to upload it to Screencast. Because this was in fact a high probability trend trade, because this was a rules met trade, I'm going to go to my spreadsheet and I'm going to drop this picture into my spreadsheet and I'm going to call it something clever like rules met long. And I'm going to be able to come back and study this look every day. Guys, I want you to spend your first 20 days with Nexgen scrolling back on a large chart, circling tails when the rules are met. That's all middle of the night on a Sunday. Guys, that was 3:50 in the morning for you night owls. And when you circle that tail, all you need to do is scroll back on your smaller, faster chart, right? Let's give it a good scroll. And price pulls back to support inside of favorable large triggers. It's amazing, isn't it? Guys, it happens every day on every market. In every scenario, you're going to see this happen. All you have to do is learn the looks, learn the rules, start creating recognition through repetition. This is your highest probability trend trade. Can you give me a Y in the room if you're comfortable? Guys, I said keep it simple, 2 charts, because it makes your life easier. Keep it simple on 2 charts. Focus on nothing but your entries. And guys, I don't want you to worry about management. I want you to focus on getting in at the right spot, because great trades great entries create manageable trades. And this is where, who are my newest folks in here? Guys, I know there's a lot of you in here. I'm going to give you a checklist right now, and this checklist was designed from a conversation with a gentleman that was chasing everything, not the best. This trend trade checklist is going to keep you focused on following your rules. This trend trade checklist is going to keep you focused on entering at the absolute best spot. And I've never had anybody in the history of this checklist do worse than 70% winners, guys. Never had anybody be able to honestly mark yes and do worse than 70% winners. That's pretty outstanding. Print this out, put it on your desktop. Study these looks. Make sure that you know exactly what it is you're looking for. And if you're not 100% because you're brand new, here's the exact same checklist. What is a good top or bottom? Well, it's a termination that creates a full reversal. There's that opportunity. And what are odds favorable triggers? Strong triggers are smalls above the large, both wide, angled in the direction of the trend. There it is visually reinforcing the rules. Guys, recognition is key. The software is outstanding. You just have to learn to use it. What is a termination condition? Price reaches, no triggers are through, the path isn't broken. That's a termination condition. When is my path clear? When both the small and the large break the area. And where does my entry come from? Guys, there's your area inside of favorable large triggers. This is everything that you need to be successful as a brand new user. So I'm going to drop this checklist in the room. One for your desktop, one to study before your trading day. And then finally, I'm going to give you guys the easiest, most simple plan for success. And this is called the KISS trading plan, guys. And KISS means keep it simple, sunshine. Stop overthinking things. Your simple plan for consistency begins with never fight the large chart direction. Never fight the large chart triggers, guys. And if you just commit to this one little thing, it's going to eradicate probably 50% of the losers that new users typically take. You're going to define your entry, and that's all your first 20 days is, guys. Define your entry. In order to enter the market for a high probability trend trade, these conditions must be met. Here's a picture of your rules being met for a short entry, right there in your trading plan. And then here's a picture of your rules being met for a long entry, right there in your trading plan. So you know exactly what it is that you're looking for. You know exactly where you're looking for it, and you know exactly what your large chart should look like to get you into it. Guys, this is your plan. And I had a trader that I respect quite a bit tell me once, if you don't have a written plan, you don't have a plan. So I'm giving you a written plan in the beginning. And notice that your entry takes up a quarter of a sheet of paper. That's it, simplicity. Every great entry, guys, needs to be managed. Every trade that you enter has to be managed. In the beginning, you're learning to read your charts, right? You're learning to recognize these things happening faster. It seems a little quick. So the same mechanical approach that you take to entries is the same mechanical approach that you can take to management. Your initial stop goes outside of that window of opportunity, right? Where the market shouldn't go. And that's pretty easy to recognize. If I'm in at the best spot, if I'm in at the area where the market is most likely to continue, my stop goes where it shouldn't go. And at this point, there's only two options. We're not worried about winning and losing. We're worried about this entry, this rules-based entry, because you can build an empire off of this entry. Either you get stopped out, cost of doing business, brush the dirt off, guys, and get ready for the next one, or you get a reversal bar in the direction of the trade, at which point you're going to reduce your risk. You're going to move your stop 2 ticks above a reversal bar that's trading down, or 2 ticks below a reversal bar that's trading up in an uptrend. And this is all you have to do. You don't have to worry about what you think, what you want, what you hope, what you wish. You're either stopped out for a small loss, no big deal, it's a normal part of trading, or it hits your first target. Brand new users, this super simple plan has your first target at $100. If the market goes $100, and a lot of times this might even happen on one bar, it's going to pull your first contract off of that position. It's going to put $100 into your account that nobody can take from you, and you're going to move your stop to break even. So now you've been paid. You're feeling confident through the memory of success. The dopamine is running through your blood veins. You have absolutely nothing to lose. So it becomes easy for you to be patient, to trust the momentum on the large chart, to trust the clear path on the large chart. And at this point, you either get stopped out, break even, or that second target gets hit. And if the second target gets hit, that's a $200 target, which means that you now have $300 in the bank. I've had people tell me, well, Mark, $300 just isn't a lot of money. $300 isn't that much. I'm not going to retire on $300. Guys, if this was the only trade that you took every day, that's $1,500 a week, right? That's $6,000 a month. That's $72,000 a year. But it's not about catching all of the trades. That same $300 on a 4 lot instead of a 2 lot is a $600 trade, which means you're at a $3,000 week, which means you're at a $12,000 month, which means you're at a $144,000 year, which means that we're going to compound. We're going to take the best of the best. We're going to give ourselves a statistical advantage at each and every time we enter the market. And by doing so, we're going to be able to catch profits. We're going to win more than we lose. And we're going to have a plan for success that's built on statistical advantages. Guys, this is your first 30 days, finding these entries, keeping your management pragmatic. And then as your education grows, so will your ability to manage trades. Every great entry creates a manageable trade. And I'm going to pull my spreadsheet over here. So while you're filling great entries over here and posting them in the room, we're going to start talking about management. And you're going to begin to recognize that when the momentum is its strongest and the path is clear, you're going to be able to hold contracts for that bigger move. You're going to be able to take that $300 trade and turn it into a $700 trade. And yes, guys, this one did hit the profit target. But I made sure that I got paid early too and managed my risk. This was a fun trade to be in. It really was. So guys, that's our first hour. First hour revolves around simplicity. First hour revolves around 2 charts. First hour revolves around building a foundation that allows you to read your charts so that you can take advantage as you grow with the software. This is crude oil. Someone said it looked good. Look at that odds favorable. I'm going to circle the tails and let's see what it looked like real time, guys. There's a pullback to support inside of favorable large triggers. Always nice to see that. But over here, my rules weren't quite met, were they? It never really got to that area of support inside of favorable large triggers. So if I'm a rules-based trader, I'm on my hands here, I'm waiting, and that wait pays off because there it is. Guys, all you have to do is study, practice, post. Together, you and I are going to get exactly where you want to be. I promise you that. Together, we're going to get to where you want to be. I just need you to post up a little bit. There's your NASDAQ. What's the NASDAQ doing? What's the S&P doing? Termination, full reversal, 50-50 trade, right? There's that odds favorable. Into a term, we got to sit on our hands and wait. It can be done. And then once again, just to inflate his ego a little bit, simplicity is the key, guys. And I took this picture this morning. Where did I put it? Did I delete that picture? Oh, I must have. I'm going to open this one back up one more time for you guys. And I want you to ask yourself, especially you guys that have been traders before, what if you did the same thing every time because that thing was proven to win more than it loses? What if every time you entered the market you had a statistical advantage? What if every time you had a back-testable, proven methodology that says this is more likely to win than it is to lose? What if you stopped chasing everything and you started focusing on the absolute best? I know there's a lot of you in this room that started chasing everything and have reverted back to the best, right? You have to have an advantage. It has to be repeatable and it has to be testable. That's what we do. Bobby, twice. That's all? Rookie. Guys, I've done it probably 20 times where I've abandoned what works to try to be busy, and it's bit me in the butt every time. So when I plea to you to keep it simple, it's not because your trading affects me. It's because I want you to be successful. Successful traders do the same thing every day. Successful traders manage their risks. Successful traders have a written plan, a plan of attack to get in and out of the market each and every time, and they leave absolutely nothing to emotion or fear or gut. Either they have their rules met or they don't. And if their rules are met, if they have odds favorable momentum, right? Everything says up. Guys, this is one of those 50-50 trades. This area has the potential to break with all of that momentum, but it hasn't broken yet. Look how easy it is to pinpoint the area of support inside of favorable large triggers and have an order waiting before the market ever gets there. And it's coming from a termination condition that created a full reversal. Rinse and repeat, guys. It can be done, and you're all going to get there at a different point, but it can be done. I'm going to take 5 minutes. When I come back, I'm going to look at the charts that people have posted today. We're going to talk about the advantages, the disadvantages. We're going to talk about management. We're going to talk about all those things that we need to talk about. If you have a question, I'm going to encourage you, post it in the room. If you have a question about what's happening right now, the easiest way to present your question in this room is to take the picture, and I want you to draw an arrow, and I want you to write something on the chart. Should this divergence worry me? And I'm going to say, don't ever be worried, right? Be happy. And then what we'll do is we'll talk about what does this divergence mean in the context of a potential trade. And then you're going to get just a little bit smarter after that conversation. Guys, I'll be back in about 5 minutes. I'm going to stretch my legs. I'm going to rest my lungs. I'm going to refill my water. When I come back, we're going to get into looking at your charts, guys. Back in a sec. I want to say it's the Ron show this morning. And I really want to show these pictures because these pictures are consistent. And this is very much why we learn to read charts. This is very much why you can gauge advantages through your chart reading, and then you can create a plan that works for you. Not everybody sees the same thing, guys. And not everybody sees it the same way. This is the one that works for Ron. Odds favorable, momentum, and a clear path. He takes a little different entry. And if I go to his next picture, it looks the same. And if I go to his next picture, it looks the same. And if I go to his next picture, it looks the same. And guys, I'm telling you, once you learn to read your charts, once you get, I'm not in the bathroom, I promise. It's the iPad or the iPods, AirPods, however you say it. I think they echo sometimes. 4x5, that's close. I can hear. Let me disconnect him and reconnect him. Hold on just 1 second. Oh, you know what it was? I think they weren't connected because I put them back in their charging thing, so you guys were probably hearing me from the microphone on my laptop. But guys, the point that I'm making here is every trade looks the same. Every trade has the same conditions. Every trade has the same looking entry. Every trade has the same looking exit. This is how you know that you're on your way, guys. The more you chase, the less you find. It's like being in one of those money grab boxes. So Ron, outstanding trading, consistent trading, plan-based trading. And I appreciate that you would put that in the room. Because what I just showed you guys was $1,000 worth of profit. From an accumulative, maybe 8 minutes of actual work. Good morning, Moon. Egads, where's all your indicators? Moon, are you with me in here? All right, so let's do something together. Are you in front of you're obviously in front of your charts. So check this out, Moon. This is what I need you to do. Man, and if this ever happens, don't hesitate. Reach out to tech. So there's a couple things. Moon, with everything down here, like that, it becomes difficult, right? To see where you've been and where you're going. If you click the capital F, it'll recenter you. And if you grab this bottom, you can kind of make it a little prettier. That's just a little scaling trick. But on your small chart, Moon, I want you to right click and I want you to go to Data Series. When you go to Data Series, and I'm going to do this for you, right there it probably says 10 days on days to load. It's going to look a little different on NinjaTrader 8, but it's the exact same idea. I want you to change that to 9. Somewhere you've got a little tick of corrupt data that's messing up your indicators. If you change that to 9 or 11, 11 works as well, you should get all of your indicators back. And then if for some reason you don't, and this is for the new users as well, guys, one of the biggest things that I love about Nexgen, and one of the biggest advantages of being a part of this organization, is Jason and technical support. And he is absolutely amazing. You can see he's got some tickets lined up. But you can always reach out to Jason and tech, and he'll get to you as soon as possible. But I always encourage you guys, let me know if there's a challenge in here, because there's a lot of things that I can fix, and we can keep Jason from having to put you in a list. Sometimes it happens, Paul, and all it is it's a corrupt little tick of data somewhere. Because, I mean, with millions of ticks going on, there's bound to be one that doesn't play well, I guess, and that's kind of what it does. So, all right. So, Moon, was that you just showing me a chart that you can take a picture? Or did you have a question about it? That would be the second half of my question, right? And I'm not sure where you got in, 925. So right about here, everything said down. You went short, you took profits, you went short, you took profits. So even without, yeah, it's practice. So the next step would be to start writing on that chart, right? Start writing what you see, why you're doing it. And I think that's great that you're practicing with getting in, getting out. And that's exactly what the demo's for. Get comfortable getting in, get comfortable getting out. Get comfortable setting stops, moving stops, doing targets. So if you have any questions about that, please let me know. But just because I really like to celebrate victories, you're coming from a termination that created a full reversal. Everything says down and you're going short. You are already 50% of the way there. And that's outstanding. You're trading with the large chart. You're trading with that direction, with that momentum. And man, if I could get everybody to do that right off the get-go, it would eliminate a lot of challenges that people have. Let's see. Hey, good morning, Craig. There's that termination that creates the full reversal. There's the momentum. And Craig, you're taking Iran style. Gosh, that's perfect. Not a high probability trend trade, right? Not everybody has to be a high probability trend trader. But look at that termination that creates the full reversal. Look at the momentum, and you take that little snippet with the odds favorable. Craig, that's outstanding. Yeah, Jim is good. Moon, Jim is amazing. He takes good care of his clients. Everybody does. Great job, Craig. Good looking trade. All right, PFI. Let's see what happens. Termination creates full reversal, gives odds favorable momentum, right? Path is clear. Beautiful entry. All right, PFI. Are you with me? Are you listening? What's wrong with this trade? Let's go through your annotations. You had odds favorable momentum. You had a clear path, and you bought the pullback to resistance inside of favorable large triggers. Were you mad when you lost it? Did you wonder what went wrong? No. It's perfect, PFI. You're going to see that triggers flipped up after the fact. It's a beautiful trade. It's a perfect trade. It's a trade that I would take and lose 1,000 out of 1,000 times. Because your rules were met 100%. And guys, this is one of the great things about class is a lot of new users are going to start beating themselves up. A lot of new users is going to go, "Oh, I screwed something up. This is the worst. I'm so mad." And what you're going to find is that it was just a great trade that didn't work. And it happens every now and then. And this is a trade, to be honest with you, that I would want to take every time it sets up. So I'm going to come over to my spreadsheet and I'm going to add this one in there. And I'm going to call it PFI's perfect short because even though the result isn't what he was looking for on this one, that's a setup that typically wins 70 to 80% of the time. What a wonderful trade. And you've been busy this morning. There's your entry. All right. It made the sheet. Too bad it was a loser. It's okay. You know it's a great trade if it makes the sheet. So PFI, what we run into here on this one, don't have a clear path yet, right? You're hoping this area breaks because the large triggers aren't through. But we have momentum. Every chart agrees. And you take a momentum style entry, stop in the right spot. And then those big yellow 1-to-1s are a great target at 88. Nice trade. Not a high probability because we don't have a clear path and the momentum is waning a little bit. But you're relying on that support. It's a 50-50 without momentum. So it's a little riskier trade. This is what it looks like a lot when the market reverses from a fib. If I'm taking a 50-50 personally, PFI, I really want odds favorable momentum. I want triggers like this. This is more likely to break an area than this is. You got a little lucky. Does that make sense? See how the smalls are already inside here? They're working their way back inside here. It's the right area, but yeah, right here, this is your best look. That separation between the two. If I'm going through areas, this look, PFI, is awesome all day long with a clear path, but if I'm trying to get through an area, I really rely on that odds favorable. Yeah, I rely on that super strong. Let's push to the next spot. And there it is right there. There's that odds favorable. It's a 50-50. I'm trying to see what's written, but it's behind there. Should have gotten out at divergence. I agree. Get out at divergence, let everything roll. That's okay though. And PFI, no, you're okay with the silhouette is one of the hardest words to spell. I like the trade. I like the entry. I think you did everything right. And if you focus on PFI just while you get your feet underneath you, when you talk about the management on a 50-50 trade, it's okay to get out. It's hard to get out because you're like, man, but what if? But what if it goes? But what if it wins? But what if? Yeah. And this is why it's repetition because you'll get to the point where your management becomes second nature and you'll find yourself going, oh, I need to exit. And then your brain's going to go, well, yeah, because this is happening, right? So you're great. Oh, 6 times speed. I've done that too. And man, can I just throw all sorts of props at you for using market replay and then bringing these pictures to class? I know there's another guy in here. This was his recipe for success. Beautiful trade. Look at that. Smalls breaking above. Everything says up. Right back to the 1-to-1s. There's 3 divergences in the same area. Might have been an exit condition for you there, right? 3 divergences. But at that point, there's nothing to lose. Beautiful trade again. I'm telling you, PFI, looking at what you're doing today compared to what you were doing last week, it's like a completely different trader. Your entries are outstanding. Look at that. Odds favorable. Oh. Odds favorable. No terminations. That pink line is a target, right? It's a target, not a termination because price didn't reach it. Ladies and gentlemen that are brand new, look at his entry. Perfect. Look at his profits. Perfect. That's a $320 trade in three minutes. PFI, that's how to do it. Clear path, guys. Clear path makes a difference. Great trading. And thank you for taking all those pictures and sharing them in the room. There's lessons for everybody. All right, Paul, let's see what you did. Everything says up. Oh, look, PFI, it's your trade. Paul get in on the other side of it. 1, 2, 3 profits all the way up. Paul, beautiful trading. Apparently, Paul's looking over your shoulder, PFI. Same conditions, same trade, same advantages, same results. Those are the ones that make me happy in the room. When I see you guys doing the same thing, right? Having those advantages. Good morning, Dab Chain. Everything says down. Everything says down. 1, 2, 3, 4 divergences. Looks like a reversal of the last 2 attempts. 21 bounced right here. It's a good spot. Do I take the entry at this spot? Not with 4 divergences, Dab, but my rules might be different than yours. Do you know which one I'd probably take, though? Is this one right here, when everything's breaking a below. I love this one, and then I still probably would have managed out. That's a tough look. That's a big fight. And then gold. In on the wrong side, but in, it turned at the fibs. Which fibs did it turn at? Right there. And then you get weak, then you get divergence. Trying to figure out where you got in on this one, Dab. You say it's all going down so it doesn't count? Right on. Okay, so here we're going down. All right, so we're coming off the midband. Everything says down. The path is clear. You take the pullback. It did end up moving this to 41 and it filled, and it went straight to the fibs, right? Nice. And I like this pattern, Dab, because it's not a termination, right? It's just one of those turns from the middle of nowhere. And it pulls back to the midband, back to the fib. Nothing follows. And then when everything agrees, you take the short and it finishes the move down to Fibonacci. I love it. That's a great chart read. David B., good morning. Weak triggers. Let's see. And at the time of entry, you do have a clear path. And then we kind of exasperate the loss of momentum with the divergence. And you did have a reversal bar from way outside of your outer band. Dave B., I don't think it's a bad trade at all. I think that, and let's go through this. Guys, this is why I say 2 charts initially. And there's more information. And Dave B., are you with me in here? And guys, this is a great example of why 2 charts. So Dave B., here we have a 50-50 with weakening triggers. Would you agree? That's a 21 chart, I'm assuming. Okay. So this isn't perfect. And then we've got weak triggers here as well. So Dave B., if you had a 50-50 on your 13-2 chart, and you had these weak triggers and not a clear path, wouldn't you insist that your smallest chart, that your entry chart, be the absolute best of the best? A lot of people do that on the 50-50s, and that's kind of their safeguard, is when it's not perfect on the large chart. So we talk about that 50-50, right? Like, I don't have a clear path, so I'm going to insist on my entry that I don't forfeit anything else. So Dave B., I think that this is a great way to use the 21, and I'm not opposed to using the higher time frames. But if the higher time frame isn't perfect, it almost makes sense that this is. Does that make sense? Because I see that a lot. I see kind of sketchy here, and then kind of sketchy here, and then they're taking what, so I like the trade. I think you had a clear path. I think everything's set up, and I think that if it was going to go, that's probably where it was going to go from. But this potential termination condition on your large chart just kind of ruined the party a little bit. And it must be a slow trading day because I've already made it through all the pictures, which means we're going to spend some time in the live market and look. And we're just going to chart read. So let's do it together. This is the S&P. Do I have strong triggers or weak triggers? Moon, you got it back. Nice job. So to center the chart, let's turn to one of those lessons. So here's a couple options. So I'm going to do a couple things. I'm going to knock my chart totally out of whack. And I'm going to scroll it back to like 7 a.m. Moon. So this one, everything is in line. I can see my most current bar because it's highlighted in black. I can see the top. I can see the current bar. Everything is good on this one. I don't have a capital F in the upper right-hand corner, and I don't have an arrow in the upper right-hand corner because when you have an arrow and a capital F, the first thing that it means is that your chart isn't centered. So if I click the F, it's going to bring bars back. But if I don't see that highlighted black price, I'm going to look for the arrow, and the arrow will bring it back to the most current bar. And the same thing is true if you've got that big gray spot because you got antsy. You can click that arrow and bring it back. And then Moon, what kind of trade are we looking at here? Everything says down. It is a short trade, right? What made you get in? And I'm not saying that it's a bad trade. But if you start the process of taking these pictures and write out, fill a couple boxes, what got me in, right? What happens is that this becomes repeatable. You have a very set and clear path for entry. And you can put yourself in a position where you can take this trade 1,000 times. Short trigger went below the midband, but on your large chart, you traded directly into the midband. Okay. I like it. It's a great trade. You had momentum. Everything was going. And then you got out at the support line. It's just a momentum style trade is what it is. And your execution's spot on. I just want to make sure that you understand why you did it because I want you to be able to repeat that because that's a good looking trade. Do you know how I know it's a good trade? Because look at this trade. I'm going to show you a picture real quick. It looks very much like that one, and that one is from a time-tested plan. So it's a momentum style trade, Moon, what you're looking at. And I want you to think about it this way. Your great entry had momentum. Your great entry was coming from that Fibonacci resistance. It was below it. Your great entry hadn't reached that midband on the large chart yet. So what you were able to do is wait for those conditions here so that you could get in and get out. And that's how you're going to be able to take this trade and kind of repeat it over time, is when you have that level of momentum and nothing in the way on the large chart, this trade tends to work out wonderfully. Does that make sense? Great trade. You're welcome. I'm a big fan of letting the large chart lead the way because when it does, you kind of guarantee that you have that momentum in place. You can do the math. That's the first way to do it. And because there's all these different entries, so you were in it One contract at 89 to 83. So that was 6 ticks. One contract at 91 to 83. That's 8. We're up to 14. 24, 27. 39. 49. Looks like about $540. What you can do is if you go to on NinjaTrader 8, you can go to your control center, and this is for 7 that I'm looking at. I don't have 8 up. You can go to account performance, or you go to your accounts, and it'll show you where you're at on simulator. And then under tools, there's one called account performance. If you put it on today's date, it'll show you where you're at for the day. Or you can just do the math the way I did. Look at the bounce off of that potential termination condition, guys. Well beyond the window of opportunity. This is why we sit on our hands in the termination conditions, because they can create a bounce. They can make the market just a wee bit untradeable. And there's crude coming down right into the termination condition. Then the NASDAQ losing momentum, losing momentum, losing momentum. Just kind of hanging out, being patient, right? Jonathan, let's see what you did. Everything says up. There's that momentum. Let it clear. Take profits. Jonathan, beautiful. Guys, I'm seeing this momentum style trade more and more. Great job. You let the bars break. You sell it at support right there. You take quick profits. Nice job, Jonathan. Beautiful trade. Great execution. PFI, you can't ask me that. Who cares what I'd do? Ask me if I'd jump off a bridge. Do I have odds favorable momentum, PFI? Let's go through it. Okay. Do I have no termination conditions? I do have a termination condition, right? Right there. Textbook, 100%, straight out of the manual. All right. So what you're telling me is that rule number 2 is not met, right? You're telling me that I reach an area that may create a bounce. And here's the 100% truth, PFI. I couldn't care less what my small chart looks like if my rules aren't met on the large. And I know that that's hard to grasp initially. Because what you're doing is you're saying, well, I know I hit a termination condition. I know that it hit, but that looks nice, so I want to take that trade. Yeah, but this is how your brain's going to work. And then I do something kind of silly. Let me show you something. And I say, hey, PFI, how did trading into the termination condition work for you here? Right? Every now and then they break. But you're asking me the same question. Do I take this trade into a termination condition? And I think this is great. And this is one of those reasons why going back and reviewing your charts every morning, guys, is such an advantage. Because PFI, I know you didn't take it, but this is a great lesson for the room, is if you woke up this morning and you said, oh my gosh, that termination condition ripped the money from my wallet. Then when you get to this one, You say, well, wait a minute, that's familiar. This is a look that may rip the money straight out of my wallet. I think it's a great question. There's your aha moment. Guys, rules should keep you safe. Rules should keep you out of trouble. How do I make it go around? Free floating? When you say free floating, do you mean so that I never lose the bars, Dr. P? Or just moving it like that? So let's do a quick little scaling lesson. Okay, so if I hold down Control, thank you PFI, and I click in the vertical axis, it's going to let me move the entire chart as one piece up and down. If I do it on the horizontal axis, it'll do the same thing for me. If I do the vertical axis without Control held down, it'll tighten everything up. And that becomes real difficult to trade, right? So if you ever do that, Dr. P, you can click the F, bonk, and it'll put it right back. And if you accidentally bump it and take it off screen, this white arrow will get you right back. Does that help a little bit? And then guys, just a reminder, in the software user guide, yeah, you're welcome. If you ever have NinjaTrader questions, let's say it's after class. I always want you to ask them in class, but if you ever have questions, it's after class, you can't get a hold of a Nexgen person, the software user guide will run you through most everything that you need to do with it. And then Dab, you asked me, you said that you're attaching the buy order to the midband. On what? My thoughts are I have absolutely no idea what you're talking about in that particular scenario. Is this the picture that goes with the question? Oh, we already saw this one. So Dab, am I arbitrarily putting an order at a midband because it's a midband rather than waiting for my rules to be met? There's a million scenarios that that it could look like. If it's moving that fast, I'd have to see a picture. Are you talking about everything's moving fast, just have an order right here on its way down? See how this is confusing for me? I wouldn't, because what if all this holds, right? I love pullbacks. But my plan isn't your plan. My plan revolves around odds favorable momentum, nothing in the way, and then a pullback to an area inside of favorable large triggers. Safia 50-50 doesn't work, right? Suggesting the termination will hold. And Dab, I know that that's weird, but you have a completely different style. Everything that I do is predicated on the large chart. So if your large chart is screaming in the direction of the trade, if your large chart is 100% clear path, doesn't it make sense that you may be able to find a momentum style entry where maybe you let the area clear and then ride that momentum and not worrying about the areas so much, but rather the clear path, the lack of areas? That's what a lot of people are doing right now, and they're finding a great level of success with it. But you have to go back and test it, right? Safi, I got you. I want to start with this because I think this picture is a lot more educational than you guys realize. Which bar? This bar? The bar that's printing? Huh, let me take care of Safi and then I'll come back to you, B. Well, you said it's a high probability trend trade, right? So let's start with, did you have odds favorable momentum? Let's just talk through it. Just give me Ys or Ns. It'll be easier. Do you have odds favorable momentum? Okay. Do you have no termination conditions? So we're 2 out of 3, right? Did you take a pullback to an area inside of favorable large triggers, or did you jump in above it and not wait for the reversal bar because your reversal bar comes off of support inside of favorable large triggers? So what did you do wrong, Safia? You moved your... Okay. But what did you do wrong on the first one? What in your plan says to have a 2-tick stop? Oh, you jumped in at the top, right into one-to-ones. And then when those one-to-ones created the bounce, you had your stop just above support inside a favorable large trigger. So you jumped in without the pullback. And if you're going to do that and hold it, when divergence printed on the momentum trade, you ignored it, or maybe you took it off, but it pulled you right back to a high probability trend trade entry. So what you did is you tried your momentum trade. I thought you were going to abandon those because your momentum trade turned into a high probability trend trade, and you're thinking about so many things that it never occurred to you in the moment that with odds favorable momentum and a clear path, that an area of support inside of favorable large triggers is a horrible stop. You were trying for a high probability trend trade. Safia, I can see your entry. You didn't even wait for a reversal bar. And this is a challenge, and please, this comes respectfully and with all the love that I can respectfully muster, is you're confusing momentum and trend trades because your brain can't differentiate between the two right now. So you're taking half of the rules for momentum and you're taking half of the rules for high probability trend trades, and you've created this bastard love child between the two that says, oh, look, it's a one-to-one. That's a momentum trade, but you're trading into it, not pulling back to it. And you're saying this is a high probability trend trade, but you're completely avoiding the best entries. And maybe I'm mistaken, Safia, but I see this a lot. I'm taking a high volume area trade. No, you're not. You're trading two different trades that you're putting together, and you're only taking half of the rules from each trade, and you're misusing them. This is where simplicity yields results, guys. If you're taking a momentum trade, momentum takes you out, right? And if you're taking a high probability trend trade, then you can't have a stop at support inside of favorable large triggers. So two different trades, Safia, half of each. And I'm glad you got some back. And then same thing, you're jumping in, divergence prints, and you're getting stopped out at support inside. This is the exact same trade, isn't it? And then you take the close above. I can definitely get on board with the second one a lot more than the first one. But you still don't have momentum on your large chart, right? Didn't you get to that weakening anything can happen triggers right at resistance without the large triggers through? If you were teaching your best friend to be a trader, you were brand new, would you tell them to take a trade right there? If I were teaching my children to trade, I would tell them to avoid this look because they might get lucky every now and then. But that one creates an awful lot of challenges with weak triggers and none of them really breaking through the area. Does that make sense? I would tell them to post more pictures for Mark. I love that. What color? Okay. How many triggers are through that area? No, it's okay. And the same thing is where in your rules does it reference color of fibs? Oh, Bobby, he's next. I got him. I think he was referring to the one right before it. Does that make sense, Safia? I know you're just asking, and I'm just explaining. There's nothing other than lessons here. But do you see how the triggers are weakening? And this is where you took the trade. The smalls have barely made it. The fib is red, right? It's easy to say, but look, it turned blue. Well, yeah, it turned blue all the way over here. So you have to be in the moment. It worked out for you, and I'll say it a million times, guys. I love it when you guys get lucky. All right, B, are you with me? Is that Brandon? I thought he was pointing to that one too, but you're asking what is this bar right here, right? So it's a reversal bar. So the bars were going up, this one is down. But this is what's called an antenna bar, which means that price came all the way up here. The antenna, these two lines represent the highest volume of the bar, but it ultimately closed down. It was ultimately a down bar. That's where this line of the body means. So it's called an antenna bar. Um, and that's cool. And it means absolutely nothing unless your rules are met. So let me go to market flow. Um, and market flow will actually, where did it go? There we go. Market flow analysis. Brandon, this will actually run through you all the different looks. The signals that are generated when a white bar goes into it. This will talk about the yellow reversal bar. So on their own, they're nothing but bars. That's all it is. But there's one of your antenna bars. Does that make sense? The challenge, Brandon, is making sure that your rules are met on the Renko charts before you ever start looking for these bars to give you information. It's really just a confirmation tool. Yeah. I took a picture this morning because I thought it was kind of funny. Um, for you guys that want to incorporate range bars, every one of these is a reversal bar, right? Every one of these people think are a signal. But unless the rules are met, they're just a reversal bar. It's just an antenna bar. And there were 3, 7, 8, 9, 10, 14. There were 17 signals in quotation bars and not one rule met. So make sure that your large chart leads the way. Make sure that your large chart's giving you the best of the best looks, giving you the information that you need. Otherwise, you're going to find yourself chasing trades that aren't actually trades. But that's all it is. And let me give you the link to these because I think understanding these bars is a great beginning to adding an 8 range chart or a 13 range chart or a 21 chart to your trading, Brandon. But go through and take your rules-based trades and see what's happening on the 8 range when it happens rather than letting the 8 range lead the way. And if you have questions, let me know. All right, PFI. 50-50, not from a good top. It's a 50-50 trade that doesn't work. PFI, that's really all it is. Smalls are below, large are above. You're hoping that this is overrun and the trend is over. Um, but the other way to look at that is not a good top. Is that a termination? It's not a termination condition, right? Both small and large clear the area. This is just a pivot. And when I have just a pivot and it pushes back and gives me a 50-50 at support in the midband, for me personally, that's a no way. That's a not a good look for me. Coming from a good top or bottom is so key. And I don't know what happened. This may be crude oil, but if I had to guess, this thing may have continued back up and maybe tried to get to the next Fibonacci, the next Fibonacci area above it. This is the buyers exceeding all of the areas, and this mid-band and support, that 50-50, it really takes away the advantage. That's crude oil. Look at NASDAQ has the same thing, right? There's that bad top, right to support. Oh my goodness gracious, let's sit on our hands. And then, so there's crude oil. Yeah, and it's just, they're trying. There's a fight going on. But look at that fight right at the key area. You can see it on that smaller, faster chart. And then, Jeremy, you took the same one, right? Guys, it's not a bad looking trade at all. The only other challenge is look at your split triggers. The large are below the synthetics are a little higher. And then you have to put a stop. If you get in low, if you get in at the mid band, your stop still has to go beyond those large triggers, right? Which means that you're sitting on 15, 16, 17 ticks of risk from a bad top on a 50-50. Does that make sense, PFI, Jeremy? And it's not because you were trading into the mid band and a fib. It was more likely because you're trading into the mid band and fib from a bad top. And I think that it's imperative to take that into account. And then once again, if you're using an 8-range chart, you have a reversal bar from the potential termination condition. And then when it creates this HVA line, what is that, 78? That's typically where your second bounce happens. That's where your higher divergence typically happens. And there it is. Picture perfect, right? Great management opportunity. So if you take the trade, oh no, 78 was right here. Nope. Yep, there's a little bounce, 74. And now we're starting to get through. Now we're starting to work it through. So they reacted, and so far the reaction's in favor of the sellers. So for me, 50-50 is right here. If I was going to take it, I might take the reaction. No, because that's right into a term. You just have to have a big stop. You'd have to be outside of that window. It's a good look. It's a tough trade. I don't think either of you did anything wrong. I think that bad top creates a little bit of patience on those. And that would be considered directly into the termination condition. Dab, your arrow's just a little bit off. This is your termination condition. This is the reaction all the way back to resistance in the large triggers. And guys, this is the indication that it may continue down, which sets you up for that 50-50. Behind the reversal marker. So yeah, John talks about that. But if you did, it still made a reversal bar against you. You still would have been stopped out, just a bigger loser. It actually makes 2 reversal bars. They can't all be winners. Paul, everything through, nothing in the way, weaker triggers with a divergence with weak triggers, and it pushes back. I don't do it. Guys, remember that I don't ever tell you guys how to trade. It's important that you understand that. What I do is I talk about advantages. And if I'm looking at a 50-50 trade and the area is not broken, There's two things that as a brand new user that I really put a lot of stock in. No divergence on the 5-1 and from a good top or bottom. This is your safest path in the beginning. And I'm going to tell you guys right now, I take 50/50s with divergence if it's coming from a good top or bottom. Or I'll take a 50/50 with no divergence if it's from a good top or bottom, or if it's a bad top, I'll take it without divergence. But my window of opportunity has to be small. It has to be a minimal risk trade for me. This one right here on the Keep It Simple plan, this is the most advantageous initially. And then as your education continues, you'll begin to recognize stuff a little more. And then Paul, we'll get back to yours. Weak triggers, area outside. Um, I don't know what happened on this one, but I wonder if that divergence from a fib with no triggers through pushed you down to 92. What is that, the S&P? And it sure did. I'm not sure where you took that trade. Oh, looks like you got to bounce up to 89. I'd have to look at your time frame here. 10:55 in at 96.75. 10:55 in at 96.75. Nope, and it just pushed right through, it looks like. Hopefully you got the bounce. Oh no, this is over here. Pushing down to 92. There we go. Paul, you're managing your trade. Um, Small chart, or your 8 range, gave you a lot of information on this one. And guys, for you guys using an 8 range, if I get a divergence from a fib outside of the mid bands, it loves to push down lower. So I'm rooting for you, Paul. And then Moon, I think you found your trade, Moon. Nothing to do now but buy software, practice it, go buy an island. Nice trade. Once again, predicated with momentum, predicated with direction, waiting for the areas to clear, get in, and then you could have made a few extra ticks respecting the problem. Great trade, Moon. And you're what, 4 days with us? Maybe 3 days out of the weekend? Outstanding. 3 days. Is this easy for you to see? That's my biggest question. Is this the one that clicks with you? It's really easy. You knew where the problems were. Thank you, Fibonacci. You knew what the momentum was. Thank you, trigger lines. And you just created this little custom. Let me get to the other side of it. And do you see how you have strong triggers here? Golly, Moon. Great job. Welcome to Nexgen. At the risk of upsetting Paul. Yeah, he gets the robe, huh? Newer users, walk me through this. Help me out here. Odds favorable momentum, yes or no? What do you guys think? Let's talk about this trade. No, no separation, Dab. There is no space between the small and the large. So it's not odds favorable momentum. Rule number 2 says clear path. That's absolutely. I'm sorry. I'm talking about for the long right here. That's my bad. I wasn't clear. And then finally, Rule number 3 says an area inside of favorable large triggers. And once again, I have to say no. 3 simple rules designed to keep you on the right side of things. I know exactly why Paul took the trade that he took. I understand. He understood the risks that were associated. But as a brand new user, without the momentum, without the area inside, that's 2/3. That's 2/3 of the equation gone. No, Paul, I liked it. Did you hear my little snippet on your range chart? One of the things that I notice very much, quite often, is on the range chart, when this divergence prints, that's pretty common. When that loss of momentum happens, the HVA line gets hit a lot. And now whether or not it goes from the HVA line is a big deal. This is where one of those signals, I think. But I think that right there creates a challenge, that loss of momentum, especially right from a fib. And then look at that. Look where it created the bounce. Right at your HVA line. Do you see it, Paul? And look at how your large triggers are still a full bar away. And then, but there's still no signals happening. I don't have the HVA line, but no signals happening yet. But yep, and just it's the divergence, Paul, that makes me go, whoa, pump the brakes, pump the brakes, because I see it a lot. Let's see if we can find an example of it happening a couple times. Divergence off the fib. Lady P, take care. And it takes you right to the HVA that's beyond your potential short. Do you see it? These areas on your 8 range are usually pretty solid when there's a fib there. And it may break. Just that little patience. Good job. Good job, good job. All right, guys, we made it through all your pictures once again. Great job. Um, S&P from a bad top, 50-50 right into the midband, right into support. I feel like there was a lesson there at some point during the day. And then once all the areas broke on crude oil, there's that low risk shot. PFI didn't miss it. It can be that easy, PFI. And I'll tell you what, it makes me happy when I go, there's your shot, and then you took it. Beautiful. Was it easy? Was it effortless? Did it make you happy? Does it have to be difficult? That's the thing you have to ask yourself. Does it have to be difficult? I don't feel like it has to be. Well, let's think. You took profits at a potential trouble spot. What got you out of the second contract? Yeah, that's true, Paul. So here's the second half, PFI. You ready? And we talked about this before. Large chart says down, right? Large chart says clear path. Small chart says perfect entry. Great exit at a potential bounce point. So walk it through it with me. You ready? What direction are the large charts on your small chart? Or the large triggers on your small chart? Just give me a U or a D down. What direction are the synthetics? What direction are the smalls? Do you suppose that might have been a little premature because of a fluctuation on a tiny little chart when everything on every chart suggested the market would go down? That's how I think about management. As I think, what changed? And the only thing that changed, in my opinion, is that it got better because those small triggers pushed down. Maybe 2 ticks above a reversal bar marker if you're going to exit with divergence or something, right? But you put them right at the one-to-ones. Doesn't it make sense that if the one-to-ones break, that it may come back and retest those one-to-ones? The same way it retests resistance that used to be support? I would say if I were going to manage this trade, trying to go tight without really sacrificing, maybe 60, 61, give it a little room to bounce off the one-to-ones. And I will manage that way. Where if I break one-to-ones and everything gets below, I'll put my stop beyond it just a little bit. That was crude oil, right? So when you exit here, did you re-enter at the area inside of favorable large triggers for your next trend trade? Why not? What changed on the large chart? What changed on the small chart? Nothing. That was an entry too. Where? Where's your term? Did price reach the fib? 1-to-1? Are you telling me, PFI, that you've got this big, strong, macho as all get out large chart that says it's going down, everything's going down, and you let one tiny little 1-to-1 on a small chart make you chicken out? Where do we look for termination conditions? What defines the areas? And this is why it's repetition, right? Creating that trust. No, not fibs. Where do I look for it? What chart defines areas? What chart defines momentum? What chart defines direction? So this is what's going to make your brain click. Are you ready, PFI? What kind of chart is a small chart? Don't go throwing your fear-based chart reads at me. What kind of chart is the small chart? What are we doing on the small chart? It's an entry chart. And then let me ask one more time, what is the only termination on a small chart that you're going to respect? 3 divergence. So PFI, you know it, you understand the language. Now you're working on repetitions to trust it. And look at that. It went to the fib. Pretty cool, right? And man, I had to do this. That's why I'm so matter of fact about it, because I had to do the exact same thing. Because you know what I used to do, PFI? I'll show you my natural progression. Is I would take this entry and I would probably exit the same place at the 1-to-1s because in my brain it was a termination condition. And then if I had a second contract, at least you made some money on it. I would take my second contract off right here because I saw the divergence at a 1-to-1, and I would completely forget that the large chart leads the way. And then it would go back down and it would reach the fib, and then I'd be like, oh man, I should have been in that trade. And then because I'm a Yahoo, I would try to take this one, even though we reached the termination condition. That's how my progression went. So you're right where you need to be, man. I mean, you are right where you need to be. Remember that the large chart leads the way. And my favorite picture on the spreadsheet that I know you have, when the large chart says down, give it a chance. When the large chart says down, give it a chance. Great job, dude, great job. Every day, one step closer. Every day, a little bit better. That's what we do, guys. Not a great top. Yep. Everything rolls up, and you're taking it down to get to, and then there's that HVA line. So, Paul, there's the other lesson, right? You're looking to get to that midband from not a great top, the momentum style. And there's your midband. Nice job, Paul. Get some of that back, right? Great heads up. That wasn't going to be a long trade, so with all that momentum, he says, I'll take momentum because I'm expecting the midband. And now sitting on our hands. Guys, great job. I'm going to take a second. I'm going to go stretch my legs again. When I come back, it's the final hour or the final 30 minutes. I am going to put the last 30 minutes on you guys. I want you to tell me what we're talking about. Whether it's entries, whether it's momentum, whether it's divergence, I don't care. I'll talk about anything that you guys want to talk about. I'll leave you with the S&P. But if you guys don't give me something to talk about, there's a good chance that the microphone is going to be quiet. So can I show how to set up replay on 8? I sure can. I'll get my Ninja Trader up while I take a break. Guys, I'll be back in 5 minutes. Rolls tomorrow, the 15th of every month. Can you guys hear me? I'm always worried. Yeah, okay, cool. Um, But the volume will probably be split. Chances are we'll stay on the current contract until the volume goes in favor. All right, guys, look at that. Bad top, right to the mid band. Hang out. Wait a minute. All right, Paul, let's do NinjaTrader 8. Let's set it up for market replay. Um, in order to set up market replay, are you with me, Paul? Just want to make sure. I did this once for somebody and they went to the bathroom. They're like, hey, can you do it again? Paul, I'll wait till he comes back. Made it right to the fib, didn't it? Isn't that cool, PFI? Large chart led the way. NASDAQ, weakness in the triggers, multiple divergences in the same location. It's pretty amazing how we can see these patterns, we can recognize these patterns, we can actually begin to trade these patterns to find a level of success because we're recognizing we're seeing the same things over and over and over. Bad top pulls all the way to a mid band. Look at where the large triggers are. I want you guys to see this. This is what we call the gap theory. And it says that if price accelerates away from the large triggers into a Fibonacci area, and the large triggers remain a full bar away, and in this case we're using the reversal bar marker to let us know that there is room for a full bar to get back to those large triggers, price is likely to close the gap to those large triggers. And it doesn't mean go long, but what it does mean is that your attempts at shorts are probably going to be short-lived. And this is what we call the gap theory, guys. This happens on every chart all the time, and it helps us identify the mid-band as a potential termination condition, as a bounce point. So it keeps you from jumping into these shorts when the mid-band is reached, because it's likely to come up here to 97.50. Paul, are you back yet so we can do market replay? Okay, cool. And of course, I always have to give you guys, I'm going to teach you how to fish, and we're also going to go through it. Where on earth is my market replay? There we go. Just in case you need it for reference. No, I'll show it because everybody needs it. And I think for me, it's easier to see it once. A lot of people are like that. And it's pretty easy. All you're going to do, Paul, is you're going to disconnect from your regular connection. And then you're going to go to connections and you're going to go to playback connection. And it's going to give you the historical data. And then right down here, you're going to have to get that market replay data. So let's say we're doing NASDAQ's first, 923. We're going to replay today, or that's yesterday won't work because yesterday was Sunday. So let's say we want to do Friday, August 4th. Pick your date, and you're going to download it, and it's going to show you that it's loading it. And guys, did you notice it just closed the gap? Oh my gosh. And then once you have it, Paul, you'll hit continue. It'll give you your playback, and it's that easy. And the great thing about NinjaTrader 8 is all you have to do now is open a workspace. What I like to do, though, is make sure that these dates are the same date from August 4th to August 4th. Otherwise, it's going to try and load tons of data that it doesn't have. But once you're there, you can just open a workspace and go. Yeah, it's easier than 7. No worries. And guys, there we go once again. Bad top, straight to the mid band. closes the gap to the large triggers, keeps you out of shorts in this location. And let's see if they want to finish the move up to Fibonacci resistance above us. That's that unfinished business. And then Paul, for you, for your long trade, that divergence keeps you focused on that potentially deeper push with the weaker triggers. Isn't that cool though? And how many times does that happen? Mid band's reach, large trigger's a full bar away and it closes the gap. That one doesn't do it. Not a ton of instances here. There we go. All the way to mid band and support. Large triggers, closes the gap. All the way to resistance, closes the gap. This is the pattern that you guys can begin to recognize. Right into support, closes the gap. It's going to create an advantage. Right into the mid band, closes the gap. Do I sound like a broken record? It doesn't mean go long to finish the business yet, right? Because it's still a downtrend. It's still momentum down. Everything still says down. If it's really going to go up, guys, things are going to change over here. Your small triggers are still on the wrong side of everything. But this would represent your first shot if you were going to take a long, if it is going to finish the business, if it is going to go up to that next key Fibonacci level. And that's what we call a momentum style entry. Using the mid band as a termination condition, it creates a full bar and it pulls right back to Fibonacci support at strong triggers. Guys, this is an advanced move. It's not a high probability trend trade, but when you begin to recognize patterns, you begin to recognize your first opportunities coming through to take advantage. Me personally, in my own trading, I never fight triggers and I never fight trend. So that's not my trade. But Paul, I know you look for that one. Do you see how the execution is the pullback right to the area right inside of those really strong small? I don't care for it. There's a lot of traders that love that look. I like my smalls to be on the correct side of the large. That's just me. Termination for the win. How many times do you need to see a termination condition reverse the market before you believe it? My number was about 800. You guys might be a little better than me. I'll tell you what, I traded in the termination conditions like I was getting paid to do it. So what I had to do is I had to start recognizing the fact, trade just to make sure they still work. I had to recognize the fact that that was my pattern, that trading in determination conditions was my pattern, and it created problems for me. Guys, this is a 50-50 trade. Can we talk about 50-50s? It's not even really. The smalls aren't through. There's momentum, but do you notice that there's two areas that haven't broken? There's both the one-to-ones as well as resistance, and we're coming from a bad bottom. If you took the first shot, guys, with no divergence and strong triggers, lower divergence kills the party. What do you guys want to talk about? And there it goes. And there's your bad bottom, straight to resistance. Let's see if they go to 15,190. Patterns. It's all about patterns, finishing the business. If you don't believe in the strength of Fibonacci, you will by the end of the first week. This is why we don't fight momentum. This is why we don't fight trend. What would you guys like to talk about? I know this is hard to believe, but I'm pretty good at this stuff. Great question, Jude. Thank you for asking. Um, so what does the background color mean? The background color, what it does is it lets you know what the overall trend of the market is. So when we talk about background color, and I've got a picture for you too, it's really pretty simple. When I look at my large chart, Jude, the first thing I do is I really just establish what direction is the market going. What direction on the large chart um, do all the investors, where's the pressure? If the background's green, we're in an uptrend. If the background is red, we're in a downtrend. And it's really that simple, following the color codes. If it's green, look for your rules to be met for trend trades long. And if it's red, look for your rules to be met for trend trades short. And then that happens. I'll show you the math that makes it happen. Maybe it's not even math, but that color change happens when the small triggers, your faster moving of the two trigger lines breaks above the large triggers. That's what paints that background green. And it's cool because in order for this to paint it green, these have to get above the large. And in order to have that rule number one, that odds favorable momentum, the smalls have to be above the large. So it's really kind of twofold. If you're always looking for long trades in the green, you can't fight trigger lines either. Does that make sense? And then when the smalls break below the large, that's what paints that background red. Try real hard to color code a little bit, make it easier for you. That's a good question. Because there are no bad questions. But like one lends itself to the other. It has to go above to make it green, and then it has to be above the large to have odds favorable, right? Pretty cool. Crude oil's caught up at support, off a termination condition, larger above, smaller above, no short trades, no long trades. NASDAQ, oh, indecision. Sure, the mechanics of doing a short trade. Everything starts, Walter, and a short trade is no different than a long trade. Um, Let me break it down into a couple different pictures. The first thing, Walter, is determining the trend, right? If the background is green, we're going to look long. If the background is short, we're going to look red. So there's the first thing. The only difference is the direction between up and down trades. The next thing we're going to do is we're going to make sure that we have odds favorable momentum in the direction of the trade. Small's below the large are wide. It's the exact same as the long, it's just opposite. So the only difference between a long trade and a short trade will be the direction of the trade. When the market is up, we're going to buy the pullbacks. When the market is down, we're going to sell them. So when we have odds favorable to the downside, when we have that downtrend, when there are no termination conditions, we're really just going to look for, let me find it. We're going to wait on the small chart for the reversal bar. And then at the time of the reversal bar, we're going to identify the area of resistance inside of favorable large triggers. Limit order goes just below it. And then we're going to take that short trade. Um, and it's interesting that you posted that question, Walter, because there are traders that see long trades more efficiently than they see short trades. There's also traders that see short trades more efficiently than they see long trades. And I think what's funny is that if you're a stock trader, right, if you started out in stocks, shorting the market feels unnatural, right? Because you know that if you short, what are you doing? You're selling. And in order to sell something, well, don't you have to already have it? Walter, I couldn't wrap my head around this for like a month. And poor John Novak, he goes, the market is a series of, what is it? For every reaction, there's an equal opposite reaction, right? So don't get caught up in buy and sell. Um, And if you let it be long and short, it makes it easier. So every time it's green and I go long, which means that I'm buying the market, that is one half of the equation. That's one half of the equal opposite reaction. So then in order to exit that position, I sell off what I bought. And that's very natural for people. That was easy for me. I'm like, well, that's easy. I bought it and now I just have to sell it to get rid of it. It's the exact same thing, Walter. And if the language helps you, you're buying it to the downside. So you're going to sell it. And then when you sell it, you have to buy to equalize, right? It's like pressurization in an airplane. The buys are on the outside, the sells are on the inside, and it's just keeping things equal so the plane doesn't crumple. So every time I go short, I'm not taking possession of anything. I didn't have to own anything. When I say I go short, it just means that I had a sell. So in order for me to exit my position, I just have to buy. So the reason for doing a short trade is because the rules are met, because you have that odds favorable momentum, because there's nothing in the way, and because the market pulls back. And all it is, Walter, and this was great for me when I finally accepted it, and it took me a while to accept it, is it means that no matter what direction the market is going, Nexgen users can make money. No matter what direction, whether it's up, whether it's down, we can take these same rules and just invert it. Even if I take, let me find my odds favorable momentum picture. If I take this picture right here, this odds favorable momentum to the upside, and I rotate it, well, I guess that didn't really work out. It's the same look either direction. It's the same look, the same advantage, the same everything. It's just we're going to sell it instead of buying it. Man, and that was so hard for me to wrap my head around. I love that you asked that question because there's probably people in here going, well, how the hell can I sell something that I don't own? And you really just kind of have to accept it. It's like gravity. You can't see gravity, but it works. Look at the fight, guys. Termination to indecision to termination. You're welcome, Walter. Great question. Thank you for asking. Can't stress it enough, guys. The more questions you ask, the quicker you're going to get to where you want to be. There's never any reason to sit on your hands and wonder. 15 hours every week. My only purpose in this room is to give you everything that you can handle, everything that you can take in, every bit of information that's going to help you get to where you want to be. And I guess we're summing up now, right? How do we minimize? PFI has done, not that it's a contest, but PFI has done the best job today. I've seen no less than 10 pictures with a myriad of questions, and I feel comfortable saying that he's probably in a better position right now than he was when he walked into this room. And that should be your goal every day. Be selfish with your time. Be selfish with your education, guys. Don't worry about anyone else. Don't worry about if you're disrupting the room because you're not. The more you ask, the better you are. But to minimize your learning curve, you've got to post pictures of your trades in class. Every trade, win, lose, or draw. Because if you win and the rules are wrong, you may have a short-term victory, but a long-term failure. There you go. Isn't it funny how that happens, PFI? And you know what's awesome? And I love this. And I used to get my feelings hurt when people didn't listen to me. Is I give everybody this. Your day one, you got this. You got the most basic, simple approach to being successful with the software. That's it. I gave it to you. This is the instructions to assembling your new grill, guys. And 90% of you are going to have extra parts when it's all over because you're going to do it your way instead of the way the instructions are. And that's okay. It doesn't hurt my feelings anymore. But as you're putting that grill together, snap pictures. Post them in the room, especially the losers. Great termination condition lesson, right? Great entry spot lesson. I had no idea if I was following rules when I started. I had no idea if I was breaking rules when I started, and I needed feedback, and John Novak was the feedback then. John Novak taught this room, and I can tell you guys right now, if you're scared to post as an anonymous name in Discord, I had to post under the name of Mark Novak in a room in front of 100 people and have my brother correct me. I had to show the world that even though my brother wrote the software, I wasn't good at it yet because I was new, and it mortified me, and I avoided it for 3 months. And it cost me a little over 5 grand from my account because I avoided it. Guys, post in the room, especially the losers. Get the feedback. Use your simulator. Participate in class. You can't lose money on simulator, guys. Your investment is time. Your investment is a little bit of effort so that you can get the recognition. You need someone to tell you what you did, right or wrong. And I focus a lot on the right. I focus a lot on celebrating the victories. And then I'm going to soft glove it. I'm going to talk to you about the wrongs. I'm going to talk to you about ways to do it better. But this really is what I feel sets Nexgen apart, guys. The education, and it's not because I'm teaching, it's because of the way it's laid out. It's live, it's interactive. No, there's no such thing as an extra strong top. It's just a strong top. Let it be. My brother says a lot of stuff. Keep it simple, PFI. It's either a termination that creates a full reversal or it's not. Um, but let's do this, right? Let's go back to the termination conditions of the, and check it out. Termination condition, a pivot stop out is cool, right? So let's do this one. A pivot stop out at a termination condition adds power to the top. So not just the divergence, but if you start stacking termination conditions in the same spot, absolutely it adds strength. We're not going to call it extra strong or super strong or holy smokes that strong. We're just going to say, now I have multiple termination conditions in the same spot. Does that make sense? Does that help? So great recognition, but that one didn't do squat, right? But when it becomes a termination condition on top of a termination condition, that's when the power hits. I think that's a great question. I just like how people like to add, oh my gosh, look guys, it made it to the next fib. Show of hands, who was surprised? Patterns are amazing. And then Paul, look, that's where the smalls got above the large. That is unfinished business. And then crude oil, there's your termination, not a pivot stop out, just a loss of momentum. That loss of momentum termination creates a full reversal. Full reversal gives me odds favorable. Odds favorable has a clear path. The only thing for me to do on this is wait for a pullback to an area of resistance inside of favorable large triggers. Why wouldn't you? PFI, are you scared of this one-to-one? Tell me that you are. I will come through that monitor. What's that going to do for us? Hopefully that's going to give us a bounce back to the perfect entry. I hope so. No large triggers. Isn't this resistance inside of favorable large triggers? It's 77. Come on, one-to-ones. Come on, divergence. Give me a push, give me a push, give me a push. The midband's not. Do your rules say that it has to be a midband? Or do your rules say an area of resistance inside of favorable large triggers? And that area could be a midband yellow one-to-ones or red Fibonacci resistance. So PFI, if the mid band is nowhere near those large triggers, is the mid band an area where we're looking for a bounce? No, we have an order waiting at resistance. And as these large triggers pull down, see how the large triggers keep coming down? That mid band's working its way inside. Pretty awesome, right? And that's why we stay aware and that's why we stay alert and we just keep going through it. And because what do we think, y'all? Small's above the large are wide, they're angled in the direction of the trend. Absolutely nothing in the way. Whoops. My only regret about this trade is that I wasn't in the market to take it. That's the easy one. Let's see how this works at the 1-to-1 with all the trigger lines up. Let's see if that 1-to-1 stops the momentum. It's a beauty. It's perfect. And it may, but we'll see. But guys, this is everything that I look for. Rules are met. If the rules are met, circle the tail. This is how you study. And if I circle the tail and it lines up with support inside of favorable large triggers, man, that's my trade, guys. That's the one. Whoops. Sorry. I did it again. Rinse and repeat all day. That's it. This is what I'm doing. This is my rule. This is what I'm looking for. If you took it at the mid-band PFI, that's your stop. If you took it at the mid-band inside of favorable large triggers, that's your stop. That is $40 of risk on a trade, and it might get it. $40. It may go, it may not go, but I still have odds favorable. I haven't reached the termination condition. I got a pullback. It was at an area inside of favorable large triggers, and I took a $40 hickey. But notice that I didn't have momentum. Small's inside, so it may push a little bit lower. I don't think I did, Dav. I might have, though. It's just all about, you're listening to, I love me some Brittany. It's all about understanding your looks to take the best ones. Because if you took this one, and this is what I try to stress for new users, if you took the one where it's perfect, from 32 to 46, that's $280 worth of profit. This one's not quite as perfect. The triggers are returning, they're still outside, but it's not the huge gap. The smalls are inside, we're losing momentum, and it pushes down a little bit. And this is the NASDAQ thing. When those small triggers come down like that, don't fight them. Because you rarely want to fight against the NASDAQ small triggers, which is why new users shouldn't be fighting the NASDAQ or shouldn't be trading the NASDAQ yet. Learn it on crude, learn it on the ES. It'll make your life easy. So new users, Moon, how'd we do today? You did amazing. Great job. Walter got a little extra knowledge. Where are my other newer traders, guys? How are we doing? There's a lot of you that buy software and stop participating. Don't do that. When you buy your software, guys, that's when you want to participate the hardest. That's when you want to be in this class nonstop. Because now you've committed to your investment, right? Good. I do too. I enjoy training you guys. This is fun for me. Don't tell my brother. But if I won the lottery tomorrow, I would probably still show up and teach you guys to read indicators because I really do enjoy it. Jude, I hope you got something out of today. You guys that were quiet, I hope that you didn't trade. Like, I hope that your rules weren't met, but we saw a lot of them. Take care, Dab. I do this every day, 15 hours a week. My only goal in life is to get you to where you want to be. So let's do it every day. Stock chip, Jude, guys, start taking pictures, start getting them in class. Um, I'm telling you, no, that's okay. You're learning at your pace, brother. It depends on the subject. There's some things that I pick up quick. I can tell you right now that I heard the phrase over and over. It's obvious, it's obvious, it's obvious. And it aggravated the ever-loving shit out of me, Jude. Sorry, I should have stopped the YouTube one before it recorded that.